Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in here. So today's agenda, we'll go through the market update and then we'll go through, as promised, the daily trades that we put out. We have a quarterly update, so I'll go through that in some detail. And I think that's it for the call. Joe's not going to be specifically talking about anything, but obviously feel free to unmute at any time, ask questions, and chime in as you guys have questions or comments. So, all right, thank you. Let's get started. All right, overall for the market, pretty much same. SPX, Russell still in 5, and NASDAQ in 7. I think the dollar went into 4. That's kind of one to watch. That's been a big driver of pushing the market down is stronger dollar. So see if that moves from a 4 to an 8. That'd be bullish for the market overall, but we'll have to wait and see. The rates have gone down too. We'll get into all that. So overall, green pie pretty much flat from last week, not too much moving. As you remember, it's pretty much straight across the board, pretty much same type of thing. So let's look at the market pulse for that. Okay, so overall, here we have the state ones and eights. Obviously, the eights are the red on top. So we've had a big drop off, from October down where they're pretty much equal at this point. What we really want to kind of concentrate on, I'll pull out the eights right now. The threes and the fives, not the threes, the fives, fives and the sevens. So if we go back and kind of look, and if I just pull out the ones right now, back when we had rallies, and we're just talking kind of like year to date type of thing, we get these rallies with the sevens coming up here. And then, if we get follow through on the fives, then we get bigger moves. So you can see back here in the August timeframe, we had a pretty good run. The fives started propping up, previously they had not. It's just pretty much all 7 action. So this one, the current one we're in, you can see the fives have pretty much, had a good follow through, same type of percentage range, like 25%. We're kind of right up around there, 24. And it's kind of looking like this point right here where things all crossed over. From here we should start, like here, if it was really bullish, the ones would have, took off and everything pretty much turned out. So, really want to see the fives start going to the ones from here. So it's just kind of similar inflection point that we were back here in August when things, dropped pretty nasty. So, if we don't start seeing those ones, it could be the same type of situation going on. So the sevens and the fives, just kind of monitoring that, but it looks pretty much exactly like this point right here. So if it repeats, where the fives and sevens start dropping, we're going to get a pretty good rundown. If we start seeing the ones, going up, and they're kind of flatlining right around that 25. If I just put the, so they're not moving much. So we really want to see that follow through, for anything bullish, and then kind of watch the eights while you're doing that too. So we had the eights turn up before that cross point, so they're all pretty much right in the same range. It's kind of a mess, when you're looking at it, but kind of day to day is kind of pretty important. I think just transitions where things are going to get an inkling of the market, but it just kind of feels just like this point here, where things all crossed each other. Like Ghostbusters, they crossed the streams and then the thing went down. So so that's the states there, 1 and 8. Just pulling up the new lows, highs, nothing much. Not much of a spike here so far in the lows. But we are in a dwell time where things have run up, and typically it's going during earnings season. Um, we're pretty much like a month out until the next earnings really start kicking off. We will, next week release the earnings plan, but we're kind of in that dwell time where there's not a lot of earnings coming out. So it's really going to just be Fed driven and other market indicators like the inflation, unemployment, things like that will be really driving the market, and anything geopolitical, obviously. So we're in a dwell time. Just kind of keep your eye on the lows. See if we get spikes here. That'll help. Indication wise. Especially with basically being at a kind of key inflection point here. So overall bullish, bearish. Oh, slow today. So, up back here, this previous one, we got around 80, 75 here. Been pretty much flatlining, for almost a month. So we're seeing a little uptick in the bearish recently. So just, obviously keep your eye on those transitions. And, if it starts coming down, it, like here, it normally will cross um, typically, at least get to 50-50. So if we start seeing a downward swoop, then I'd expect that 50-50 bullish bearish to be met in the near future. Pretty much like a force of nature at this point, where these things go up and down. This one, got right around 50-50. That's why I say it gets right there. So, you go longer term, same type of thing, starts coming down hard. It's going to cross, starts coming up and across. So that one, I call it 50-50, pretty much right near it. So, yeah, so that's things I'd look at. Market pulse, pretty good indicators that I would, check on a daily basis. Doesn't take long. So, all right, let's get into SPX. So we talked last week, 4,100 was the key level. You can see we got to 41.51, turned right around and had a big drop. So obviously met the target, hit that resistance level that we were talking about, and that's on the long-term downtrend for year to date on the SPX. So I'll pull that chart up next, but obviously that was a key level, and I was going to be surprised if we broke it, and we didn't really break it. So, where we're at currently, we've pretty much done the average move already. Typically we'll try to do another run, but I think kind of right now we'll have to see if we can get above this entry price. This is going to be resistance right now. 39.60, call it 64. So getting them back above that, then at that point you would expect another kind of run. Doesn't always happen like that. This one's a little, typically it'd run up in here, come down and then go. So this one ran all the way up, and that's just this huge day here. Not really following things exactly. So, but it has made the move. We got like another 5-6 trading days in here typically, but really down to the bottom, 3,800. That's our range. So, the stop losses will give you a good indication. The current range for SPX is 4,200 to 3,800. So we're down near the bottom, the lower portion of that. So really just kind of watch these stops. These are all, support levels down here. where you can see bounces, and then, the critical one is 3,800 right below it. So that's the current channel it's in, and I'll show you that on the chart here. Let me clear those. Okay, so let's do the top line here. So you can see, that's why we said 4,100. Pretty much right there. So now it's a little lower than 4,100. Obviously, this line is continuing down. It's a downward trend. So below 40, I don't know exactly what it'd be. It's like 40.75 or something maybe at this point, but that's that key level we were looking at, and it failed. So the downtrend continues, and that's for year to date. This is pretty much January down here, and it's failed every time. This was, it's set up, here it failed, and then the recent one, it's also failed. So that is our main thing to be watching, to the upside. Now to the downside, let me pull it in a little closer so I can get 3,800. There we go. So for the downside, here's our 3,800. Had problems. It's kind of like 1,700 level for that the Russell. This one, it's just, it's broken down into there, but not for long. Here it's starting to show, breaks down, come up, retest here, and then turns into support, twice tested, and then just runs up right to our our downtrend line up here. So, and then down here, we broke down a lot better, showing resistance here, and then broke out, and then pretty much been kind of a back and forth war at that 3,800. We got a little higher here, but bigger picture, that 3,800 is going to be getting, that the downtrend line is really going to start, pushing on that level, that 3,800. So that'll be very important to watch as we get, and it takes time to do that, but we have these kind of triangles. So that's 37. So if we could just go a little above that, these things are starting to converge. So at some point, something's going to break. Sorry, thought it would scale out, but the Zoom doesn't scale out. So at some point, probably next year, these would converge, but it's getting tighter and tighter in here. So something's going to break one way or the other. I'd say in the next month or so would be my guess. So, top line is the 4,200 right up here. I got to clear these. As I said, top line 4,200 right now. So it's up here. We had a pretty much false breakout back in August. And then, the bottom line here is at 38 for the next level. Okay, so let's SPX. Let's look at Russell. Now, this one led into, this one went into state 5 earlier. It's pretty much done the average, typical path so far. Typically you get up here, it's either resistance or, and it pops up at this average move. So that's pretty much what it did, the average move. We did first level resistance, bounce off support, get up to the average move, and it either breaks or, falls. So this one is fell down there. And really the key to that was our 1900 level. So you could see during this current state down here to the left, our high was 1898.45. So those two key levels, the 4,100 on SPX and 1900 on Russell, they pretty much coincide, trying to break those at the same time, and they both failed. So obviously, not enough strength in the market to go bullish overall for for the market. So right now we're at right around this kind of 1800 level. So really want to see if we do make a move higher, can it get above that 1845? Otherwise, the current stops, you can look for potential bounces off of those. Down below that, it's 1700. It's not even on that chart. That's our current range, and I'll pull that up right now. So, where this thing normally goes is back to 6, 43% of the time. You get about a 30% chance it's going to 1, 7. So that's a weaker bullish state, so it's almost like a 50-50, whether it's going to be bullish or bearish from, state 5. I'll pull up SPX real quick too. So, similar, maybe a little more slanted. You got 6 and 8 here, about 52%. So, just call it 50-50 for both on whether they're going to be bullish or bearish from here. So obviously critical states to be watching, whether this trend continues or not. I did, mention before, the transition was a bit strange because normally we get, things going up and then it goes to 5. This one, we had a down day and it went to 5. Pretty much been kind of chopping around. Same thing here, chopping around in here, trying to find direction. But the key is obviously those high levels. Can we break those? So let's pull up the chart here. So we got you can see the 19 going all the way back here, and then 17 is the bottom of the range. So 19 obviously very important. Support all back here, breakdown, resistance. Then we had the false breakout up to the 200 moving average, came back down, resistance, resistance, resistance. So obviously something you want to keep your eye on at 1900 to the upside. And then 17's been real problematic to break through, similar to that 38, even more so than that 38 on the SPX. So that's where we're at on these. It's going to pull up NDX kind of real quick. Now this one's state 7 still, so this one's been lagging pretty much, leading the market down. So, just been choppy back here in 4th. Obviously, I want to pull up our one chart that, the 200. Just want to pull that up for you guys. So we had talked about this quite a bit, and, we had breakdowns here, so it's pretty much been going back and forth, but, we're back to, right off of, that line right now. So I think it's 11,420. So we're about, 100 points, from breaking below that. And if you remember, these breakdowns previously had been really bad omens, obviously, for the market back in 08 and all the way back 2002. In 2000, not 2002. So, so obviously not behaving the same, but very important to watch this. I think, if we're below this, it's big red flag overall, for moving below that level. So I just wanted to point that one out. I don't know if you guys watch, you should be watching the 10-year. Crazy moves here, especially, we're at 344. Just huge move down. Our high here was 433. So we almost dropped a whole point, which is unheard of. The moves in this and volatility just, point to so much uncertainty in the market. These things, these treasury markets normally do not move like this. So definitely a lot of risk in the market overall, but, huge drop. Our Fed funds rate, currently is 375. So we're inverted to the overnight even more than what we were before. So, and we'll talk about that. I got some charts to go through, but always, keep your eye on this, see if this thing bottoms, or, this is really like a recession indicator at this point, because the Fed's gonna, raise rates next week. Again, so obviously they're pricing in longer term, like a pivot, and, recession is what that's basically telling me.
Hey, Josh.
Yeah.
Josh is Lee. Can I jump in or should I hold my question?
Oh, go ahead.
Okay, talking about the Fed and the Treasury 10-year yield and all of that, you previously have shown a chart where when interest rates get above 4%, 4.5%, then stocks really perform very poorly.
Right.
And so I think next week we'll be above 4%. We'll be at 4.25%, I want to say.
Yeah, that chart was for the 10-year above. So the 10-year being above 4.5.
Oh, okay. Good. Then you straighten me out. Thanks.
Yeah, no problem. Yeah, so we got up near that. I mean, 4.33, but I guess the bond market's is pricing in recession right now. That's all I can surmise from this. When they're still raising rates, yeah, it's kind of strange in my opinion, but yeah, overall, Fed next meeting next week. So I think they're going quiet now. No more speeches. So right now we're at right around 75%. They said anything over 80 is a lock. So this is still up in the air between 50 and 75. If it gets between 80 going in, then it's going to be whatever 50%, 50-point hike. So right now, nothing guaranteed. Looking like a 50. Joe predicted 50, so that's probably good bet there. I think it'll be 50 also. But we do have a reading on Friday for core inflation, so that could sway things. But we'll have to wait and see what comes out there. Fed balance sheet, we had a decent drop off from previous week, like 40 billion. So they're still moving, dropping assets. 1 year, we're lower. So still got a long ways to go. I think what we had talked about before, last time we ran into problems was back here in 19, and that was like a 15% runoff. So I think a 15% I calculated before, we'd need to go another trillion drop just to get to like a percentage wise 15% drop. So we're, I guess, about halfway-ish there. Yeah, about another trillion. And then, we'd have the same, see if we have the same kind of overnight liquidity issues start popping up, but haven't seen much of that or many stories on that right now, but that's always something to be concerned about as they pull. We showed the money supply chart last week. This will be probably the first year ever that they're shrinking M2. So just something to keep your eye on for liquidity stories starting to pop up or not. The rates, like I said, down here in the 10-year, 3.4 something. You could see, I mean, we're inverted to the 1 month here. That's 3.6. Let me pull this up. I mean, everything's inverted, and the 1 year is your highest rate, 4.7 something, and this keeps getting. I mean, this is 0.8 almost. The 10-2, which we've showed a lot, so very inverted, very concerning. What I wanted to pull up to show you, found I know you guys like these charts, so this one is no, not that one. Pivot chart. So this is previous pivots in bear markets. So what I want to show is going back. Yeah. So this goes all the way back to the 70s, 60s, 70s. You can see here, where the Fed pivots. Basically, they're showing like where the Fed pivots and then the market turns after they pivot. So kind of interesting. I mean, back here, they pivot at the top, right, like right near the top. I wouldn't, kind of throw out this one kind of anomaly. That's back when they're raising rates and 18, and then basically Trump was all over them and they reverse course. So I don't think they really ran their full plan, but very interesting. That the pivots, were the prelude to even more declines. So my thesis on that is, the Fed's raising rates until something in the economy breaks, basically, and then once they pivot, the damage is done, which is why the market will go lower. So that's my thought. I don't know if anyone else had, I know it's new information, but any other thought on that?
Josh Ligon.
Yeah, they.
Hey, I have a question.
Mhm.
That's great information. What is a predictor? What is an indicator of when the market turns? So the Fed pivots, the market's going down, and pretty dramatic, it looks like. But then it's something, it turns around and goes up.
Right.
I'd like to ride that ride up. How can
Oh
I
yeah.
how can I tell? Yeah, that's the $84 question. Do you have any idea?
Well, I think this is, the Fed, what they're doing is they're driving the economy into a recession. They're trying to manage it, for whatever reason. So basically at, some point the recession runs its course. And, things start to pick back up eventually, and it's kind of like that cycle that we've shown, like it's an economic cycle. So they're like basically initiating it, and then it takes however long to run through that whole cycle where things start bouncing. And the markets are forward looking. So like the markets bottom in what, like March 08. And that's really also when the Fed started, talking about like pumping all the, all this stuff, this QE. So I think each one would be different. I haven't been around long enough to talk about, these. Joe may be able to chime in on some of the longer ones, earlier ones. So, but I mean, yeah, that's kind of my thought. I think worrying about picking the bottom is not our immediate concern right now. Based off of this type of chart. It's more
Right.
about, okay, what's coming next? Like, okay, when people are trading, okay, the Fed's going to pivot like it's a bullish thing, but this tells you the exact opposite. Like when the Fed pivots, and that's the time, where it gets ugly. And that's based off of, okay, if they've already, broken things structurally in the economy, then they'll pivot. But if they do it beforehand, which I kind of think was like this 18, nothing had really broke at that point. Um, I think that one's a little different. But these other ones,
Right.
there were structure, serious
Mhm.
issues
Mhm.
in the economy. So I think that's the key, is we start seeing some serious issues, and we've seen a lot, of actual issues in the economy, like um, supply chain issues, inflation, lots of housing downturns starting. So there's a lot of things actually problematic in the economy right now. Whereas like 18, it was like everything's great except for they're raising rates and uh, yeah.
Right. Hey,
Mhm.
when you have an opportunity, would you put this out on the shared drive so I can pull it and look at it, please?
Mhm.
Thank you.
Yeah, sure, we'll do.
Hey, Josh, not
Yeah.
sure what you were suggesting with me going back to the 70s, but so no real insights to the pivots. But the one thing I will say about, the mid 80s, as traders, we would stand around on the trading floor, market closed at 4 o'clock, and every Thursday at 4:30, we would wait for the money supply number. So there was enormous focus on kind of what the Fed was doing week to week, but I can't relate it to Fed pivots specifically.
Yeah, that number's not even looked at really much, other
Yeah,
than,
it was,
we looked at it last
yeah.
week, but
Right, and you do a good job, tracking, what's happening with the balance sheet. But yeah, literally, I forget how long that went on. I got to believe at least it was a couple of years in the 80s. Thursday at 4:30, was the big number. M2 and basically M2, I think.
okay, yeah, I'll put this out, Lee, so you guys can have that image. I had another one. I think we'll do the inversions next week, Joe. I haven't had enough time to kind of analyze it, but this M2 supply we were talking about, obviously so far this year. And this was as of end of October. And you can find all these on the Federal Reserve site. It's a mess to go in there. It's very hard to find things, but we'll have to see how we end up year to year. But obviously, it's going to be the lowest, since forever. 94 was 0.3. So we had some low ones back here, but that 25 really jumps out. That's our inflation. So, okay. I think that was it for market update. Thanks, Lee. Good questions. Did anyone else have questions, comments on that?
I can go back and I remember part of the 70s. we had the oil embargo back then, and there's long lines at all the gas stations. It was pretty brutal back then. I remember the economy wasn't doing that well. That was part of the reason.
Yeah.
Also, that's when Nixon took us off the gold standard.
Right.
The economy overextended itself because of Vietnam and all that stuff. So you had a bunch of factors back then.
Mm-hmm. Yeah. Yeah. I think the gold standard was a big thing.
Yeah. I still think it's a big thing.
Yeah. No, I hear rumblings, like the BRICS and Russia and countries like that are going to be rolling out like a commodities-backed, currency in the near future. I don't think that'd be good for the dollar.
No, I don't either. No.
Yeah. So. Okay. Yeah. Thanks, Stan. Anyone else?
Josh, great job as always. Just one comment. I noticed that the oil index we tracked did go into state 8, just yesterday.
Oh.
So and that is actually tracked pretty well. So it'll be interesting to see whether it continues to head south. That would certainly be a headwind for the market, you would think, or not a headwind, but a tailwind.
Right. Yeah. And for us consumers. Yeah, I've seen the gas prices drop recently, so I think I paid like $3.12 today or something. So I'll try and pull that up. Okay.
Josh, back to that chart you had on the Fed pivot.
Yeah.
Yeah, I'm just thinking about it, and when they pivot, they either stopped or they're reducing the interest rates. And like I said, it's usually when something has broken that they start to do that. And it takes a while for that, for those interest rates to come down. But it allows the smaller companies to start to borrow again at a cheaper rate.
Mhm.
Because that's what hurts the small companies right now is the high interest rates they have. They can't cost them more money to invest in their companies.
Right.
So I would think, to Lee's question, he wants to ride the bottom up. And I think a lot of that would be earnings driven.
Yeah, that's a good point. We didn't discuss earnings, but I know Joe's been tracking overall, like kind of earnings, um, growth and things like that. Earnings, bottoming would definitely be, where you're looking, to, go long. Okay, yeah, I'll put this out there. Obviously, you guys can think about it. That's what, I had come up with about pivots, is kind of counterintuitive. Especially how people are trading now about like, oh, pivot, we want to pivot. I don't know if you want to pivot. Okay, so I think that was it for market update. I can, while I got this open, so I put in the new summary. It's right here. So I got them all going back. They've changed over time. But this is the daily trade summary through November 2022. And while I'm in here, I'll just put the pivot chart in there. So you got it. Okay, so it's in there now. And I'll this will all clean up too, because the earnings next week. So we'll have all new stuff and earnings results and the plan for next quarter coming out next week. So okay, let me clear up this stuff. So this is January 2021 through November of 2022. So these are the daily trades. You get your email daily trade that pop up in the system. And you can also find them in the screener. In the future, we'll have its own little button here, the proprietary trades, where you can just go straight to that. But right now, you still have to go in the screener form, or just click on the link in the email. So, okay. So, obviously, so the top ones here, and I talked, well, let's just go through. So, all these trades on this tab. So we have two tabs. One is for a minimum of 1,000 and a maximum of 2,500. So, controlled risk for all these trades. So nothing over 2,500 is taken. Whereas on the front one, it's just a minimum of 1,000. So you could have a trade in here that's 15,000 or 20 or something. So this one, I kind of lean on more, as most people aren't going to just take a $17,000 trade and then everything else is 1,000. So it's kind of a level risk type thing. These are the new bull put tracking. So these bull puts started September 27th of last year, so a little over a year. So now we have year-over-year data on them, near the market top. So not bad, but the other ones here also just show you, like, these are these two are new, brand new, and then this one just started populating. We fixed the data, so this one started populating in September. The iTrend very bullish, and we had a seminar. Some of you guys might have remembered it was part of that. But these ones started in July. So all that information obviously below, but you know, the difference between the bull call, because you may see bull calls a lot higher, just they've been tracked since January of 2021, you can see here, whereas the other ones, you know, were near market tops. So, so the top, you know, kind of level here. So these, all these up here are, you know, state one, or, you know, these other ones are state two. So you can see there's just not a lot of action, you know, quarter over quarter and year over year. So not a lot of action. I think this had one loss, you know, like year over year, like not much action going on because a lot of the trades, you know, basically haven't been in one or two. So there just hadn't been a lot overall. But, you know, kind of, you know, the 5 year did pretty well quarter over quarter, you know, still had some trades, but not a ton like we're used to. These used to be a lot more, but, you know, everything's kind of moved down to 8s and 4s and things like that. So, but overall, you know, you could see here, quarter over quarter, year over year, pretty strong, like for the 5 year. You know, the 1 year's pretty much flattish. You know, 10 year doing okay. Year over year, decent. This one's been really strong just overall, the Keltner pullback. I don't think that one's ever disappointed me. So that one's done really well. And you can see, you know, like the win rates here, this channel, I mean, this column here, win rates. So the bull call is 85 and the bull puts 91. Now there's only like one trade active right now. So not very, and you can see here, not a lot of active trades in state 1 or 2. Whereas down here, you know, you got more. So, you know, pretty strong results overall. I mean, just, you know, kind of minimal losers for this top end, you know, down here. So these are both state 4. Nothing quarter over quarter for the 1 year. I think the correlations have broken down a little. Just, you know, the SPX has, you know, had a pretty bad year overall. So I think some of the correlations, you know, are percentage wise are breaking down. So we're just not seeing as many trades in there. You know, the Keltner channel, obviously one of our strong ones. You know, kind of similar stats to the state 2 with the state 4, kind of similar win percentages, and you know, overall pretty strong. Yeah, year over year strong. The bottoms obviously have been, you know, big, lots of trades. So I'll pull up the August just so you can get a glimpse. So this is, you know, this was August, the bottoms for Keltner channel RSI. You can see this one negative, you know, not that many trades overall. And then, you know, now we got, you know, quite a few more trades. You can see the quarter over quarter movement has been huge. And that's just the function of where the market is. You know, we're doing 7-8, 7-8. So you're going to get a lot more of those bottom trades during this time frame. But yeah, I mean, really strong there. And, you know, if you see a blank here, it just means I haven't been doing these for a year yet. So like this one just started this quarter. So next quarter, it'll have quarter over quarter, but it'll take a year to get year over year. So these are the new trades that we rolled out. You know, Keltner channel. So this one doesn't involve state modeling at all. Same with this. So these are free to populate any day, you know, outside of state modeling. So I've done, you know, the Keltner channel obviously has done, I think, a little better, but quite a few trades. I mean, you look at the bull puts here, 112 and then an 8. So that's quite a few trades since July, you know, 21st when it started. So pretty active, you know, but it's done well. You know, it started we started at 721 and, I think we talked about this last time, just started out pretty ugly for him. But you can see, over time, it's, that's why we put it out. You're going to have some dips, but, there wasn't a lot of active trades. All of these had closed out winners, but we had a lot of actives that were down at that point. But, most of those have closed out as winners. So, it's just, testament to the testing and, tracking these like real time to see how well they do. I trend so far undefeated. Let's see if see how long that lasts. So it was just started populating in September when we fixed the data. So those now be coming out. So if you see one of these, definitely take a look at it. See if it suits your risk parameters, and if if you're not trading them live, you can always do, say, okay, I like this trade, track it in a virtual portfolio, do like simulated trades and be like, okay, does this work out or not? But obviously, I think the key is to control your risk. And, I just do the minimum 1 to 2,500, but I would try and do like, okay, I want to average like 1,500 or 2,000 or something like that per trade. So you want, try and level the risk even more than what I'm doing here.
Hey, Josh, Dan,
Yeah.
looking at that chart, how do you tell, what the dates are, what the state is? All that information you're just talking about, I don't see.
Oh, no, it's not included. Like these are like, we have the website, we'll tell you which state they're in. Like on our webpage, it says, okay, here's all the studies. And then, this is state 1. These are state 2 here. State 4 is the deep pullback. So pullback is state 2.
Oh, it's on the individual.
Yeah, the
Studies.
web pages.
I got it. Okay.
Yeah, so it's under, and I guess we could make that more clear, but the new website will look a lot different. Maybe I can show them real quick, huh, Joe? Give them a preview.
Yeah, why not? Yep.
All right, this is getting close to being done. Hopefully early next year. So this would be our like proprietary trades. So basically it has all the different trades you can click through, and it tells you the specific parameters for different things.
Oh, cool.
Yeah, so this one is state 1. These are state 2. Deep pullbacks 4, and then bottoms 8. So that's the language. And the last 3 don't have specific states to them. So there's only 1 and 1, then pullback 2. Yeah.
When is that going to roll out?
We wish we could give you a date.
Yeah.
Sometime in the beginning of the year. As Josh said, we're getting darn close.
Oh, okay.
Yeah.
Cool.
Yeah, that's our new homepage. So
Hey, that trend very bullish. Looks
Mhm.
so interesting. And I know I attended the seminar,
Yeah.
but that was a little while ago. Where can I go to read up on
Oh Lord.
it? Okay.
Yeah,
That was my thought too. Yeah.
yeah, I don't know if it's on. I don't think this one got populated with it. Yeah, this has the old ones. So the old webpage doesn't have the newer ones on it. We just haven't updated it, but
Okay.
I can this
Oh,
is,
there you go.
yeah. I'll put in the chat here for you.
Thank you.
That's the quick summary. So that one tested really well. So, and I've been waiting for it to come back. So it's back. Our programmer's doing great work. So, yeah, I think that was the summary. Yeah, you can look at the min risk, but these things get swayed. You know, obviously the risk per trade's a lot higher, you know, because you got, you know, a $15,000 trade in there, and if it wins, you know, it looks good. If it doesn't, then it looks real bad. So you could see like a 10,000 loss here. Then you got like a 50 here, where on this page you got 627. So you know, those big trades will sway you. You know, we did the same thing with earnings. You know, we pulled out those big trades because, you know, it could either make or break everything, and you're relying on one trade or two trades, you know, to drive your profit, not, you know, a consistent level of risk. So
Josh, this is Russ.
hey, Russ.
When you see these bull calls or bull puts going against you, what's your suggestion of managing it other than just selling it out?
Yeah, I mean, you could always, yeah, I mean, you have multiple options. You know, if you like the symbol and you think it's coming back, but you just need more time, you can always roll it. You know, it costs you a little more. But you know, the way it's designed is, you know, you just take the, you know, you take the loss and you move on. You know, if you're doing the trade systematically, you know, you don't try and manage it. You know, I'm sure Dave would have, you know, 10 ideas. But the way these are designed is just, okay, you're going to take some losses. So, you know, you can see all these, you know, they have losses in them, you know, even if it's only, you know, 8 out of 120 so far, but still going to take some losses. So, you know, really it's just like, you know, doing it like a systematic way and, you know, kind of writing those off, but, you know, tactically trying to, you know, manage, you know, losses. I think that's a whole another kind of discussion.
Okay.
Joe, did you have any comments on that or someone else?
I think that you hit the nail on the head. The whole idea here is for it to be systematic. But I mean, and generally these trades have an awful lot of time in them.
Right.
You know, and I would always go back to the charts, and then also your belief in that underlying, you know, how good is it inside of the Delphian analytics and the state modeling. So, you know, if you believe in the state modeling and it rolls over, then I'd get out quickly. But I think going back to what you said, trying to keep this thing systematic is what is going to, you know, build those numbers over time.
Josh, when you put those trades on, is the system, let's say you're looking for, you know, 25%, is the system automatically exiting the trade, or are you watching these and exiting?
No, I get an alert. So these are all end of day results, right? So, you know, if it goes up above 25, then I close it out. So it's end of day data.
I got you.
Yeah.
Okay.
So if
Thanks.
you had an alert, like real-time alert,
Yeah.
like in a brokerage, then, you know, I would say maybe you have, you know, some of the top end, like over 25% would, you know, you wouldn't get, but I'm pretty sure that, you know, some of these may have hit the 25 intraday. You know, like I see ones all the time that are like 24.4%, you know. So, you know, they could have hit it intraday and ended up turning around. So like really, you know, this would be your minimum like win-loss percentage.
So potentially you could actually get a better return on a real-time platform than
Yeah.
what you've shown here.
Yeah. This is kind of like the minimum win percentage, you know. The
Yeah.
profit, you know, it's hard to say, you know, if it hit 25% and, you know, ran real hard, you know, you would have got out at 25, but the end of the day says it went up to like 31% or something, you know.
Yeah.
So,
Oh, cool. Thank you.
Hey, Josh, the profit per trade, that includes the wins and the losses, correct?
Correct.
Thank you.
Yeah, that's total wins and losses there.
Yep.
Hey, Josh,
Yep.
how do you get to the two different views on your, like when you get the email that you get the high probabilities versus the custom, you get like two different views. One when you do it through the web and one through the site.
Yeah, so you're talking about the daily trades
Correct,
alert? Yeah,
right.
well, yeah, the one through the email, that comes through. I don't have let me see, it's in my trash. I get them every day, so where is it? Why didn't it show my trash? They move stuff all the time. There we go. Daily trades. So this is the email one. Let's close this out. Yeah, and then this would be the one in the screener. So I mean, this format is what's going to be on the new website like this. So you get an email every day, where you can just click it and it'll take you there. That's where I go because it's a lot more presentable than this here where you're clicking through. But if you don't get the email, or it's in your spam, you can always just go here and click one way or the other, and then like an expand. Just a lot more clunky. This is a lot better, just to do that link. And that's what's in the new website. It'll be, just go right to the drop down. So does that answer your question?
Sure. Do you have the explanation of when you do it from the other one, you have like targets, K1 and all that? I'm not exactly sure what all that's all about.
The K1.
Yeah, go to your, yeah, right there. It says, no, that's not it. The other site.
This one.
The funnel.
Yeah, this is the funnel. This is the screener.
I guess it was from the Kettner channel or something, target 1 or K1, K2.
Yeah, I'm not sure. Like we put in a profit target, so this would be, if you got to execute it at these mid prices, you'd want to get out at this price at 25%. But I don't know K1. Not sure.
Check the Kettner bottom. Oh yeah, that's not it either. Oh, yeah, like the target 3 price, then you have the previous KC and the lower KC.
Mm-hmm. Yeah, this is from this is the data from, so we use Keltner bottom, where target 3 has been met. So this is target 3 price. So you can see that the current close is below. Done, and it tells you the date it was met. So it was met 11/4. So it's been down there a while, right? But it just basically tells you this is like statistics. So the lower, so the previous lower, so yesterday's was 118. So you can see the close below is 115.97, so it went below. And this is, you know, the new lower KC, but we crossed below that because we went from 120 to 116 basically. So we crossed below and we had met the target. That's all that's showing, you know,
Okay.
for the criteria.
Is that similar to the state 2 target 3?
Yeah, same thing. Just in the 8.
Do we have one for state 2 target 3 if we ever get to it?
Yeah, a bunch of those are, these two are state 2, target 3, the SPX, this is state 2, target 2 here.
Hmm.
I think this is target 1. Yep,
Okay.
okay. Good questions. Anyone else? Feel free. No, it's good questions, guys. Joe, did you have anything else before we wrap up?
I do not, Josh.
Okay. All right, well, yeah, we'll close it up here. You know, thanks for all the questions, comments. Next week, we'll be going through the earnings results and putting out the earnings plan for next quarter. So we'll look forward to that. So until then, see you next week. Thank you all.
Hi, everyone.